give more returns. Get more security and more interest on your fixed deposits from Sri Lanka's largest finance company, LMDtv Finance.
A people resplendent with sincerity still walk amongst us. Be honest. The beauty of a nation lies in the integrity of its people. Refresh Sri Lanka for a civic-minded society. In association with AICPA and SIMA and 99X. LMD, the voice of business.
Hello and welcome to LMDtv. Tonight on the forum, we're zooming in on the economy and emerging trends for the rupee. And with us, we have the Chairman of Capital Alliance Investments, Kanishke Mannakkara. Very nice to have you on the show, Kanishke.
Thanks very much for having me.
Kanishke, to start off our conversation, we're in April 2023 and the crisis is still going strong. Can you give our viewers an overview of the present dynamics of the Sri Lankan economy?
Sure. I'll start. Since the focus of this conversation is anyway about the rupee, I'll start with the BOP and I'll move my way down from there. So what's interesting over the last 12 months or so, or maybe the last 9 months, is this, real shift that we have seen in the balance of payments. Part of the reason we got into this, into as big a mess as we did before, was because we were running persistent balance of payments deficits, and that's what led to this, so-called dollar shortage, etc. Now, mainly as a result of tightening monetary conditions, very high interest rates, which led to, demand reduction domestically, to a lesser extent because of import controls. And then we can elaborate on that further if you're interested. We have seen the balance of payments turn positive. It really turned positive, I would say, around Q3 last year. But now it's quite healthily positive, about $200 million or so per month. Aided by tourism coming back, aided by remittances for sure, but also aided by a reduced trade deficit, which is imports minus exports. So it's a combination of these things that has led to the BOP improving, and that is then leading to and driving the stabilization and apparent strength of the rupee. Just going in, because you asked me about the economy as a whole, Ruwandi, I'll just talk about the other areas as well. We're also seeing inflation coming down. It's come down a little bit from 70% to 50% over the last 3 months, but there's a lot more to go. So the base effect is going to kick in over the next 3 months. To elaborate what that base effect is that inflation is normally measured on a year-on-year basis. There are multiple ways of measuring it, but one of the commonly used measures is year-on-year. And it's around March, April, May last year that price levels really started increasing. So when we think about price inflation as of 31st March, for example, and I don't think those figures are out, we're looking at 28th February, for example, that is the price differential between 28th February 2023 and 28th February 2022. When prices really increased rapidly in March, April, May 2022, that's still baked into your February 2023 inflation figure. But when you look at the CCPI figures, what you see is a very gradual increase in prices since about July last year. So as we head into July this year, you'll then start looking at inflation as prices in July this year versus prices in July last year. And by that measure, which is really inflation, we expect inflation to come down to single digits at CAL. So it will be a very sharp decline in interest rates, in inflation that we see over the next 4 to 6 months. And then we'll see it normalize back to levels that we're used to seeing in the past. Interest rates have already started coming down. AWPLR is down by, I think, 6 or 7% since the start of this year itself. And we think it will come down further. Clearly, everybody was aware that 30% interest rates were not sustainable. Even at 20%, they are too high. But, interest rates are sticky downwards. I think all the conditions are right for interest rates to fall. It's just a matter of time. So we see interest rates also falling over the next 12 to 18 months fairly significantly. We think by the end of 2024, interest rates could be back down to something between 8 and 12%. I'm talking about government security rates, and then everything else will be a touch above that. Finally is growth, GDP, and this is an interesting one. I think IMF and World Bank have talked about a minus 3%, or a 3% GDP contraction this year. We don't agree with that view. So I don't know, there might have been multiple reasons for the IMF using the assumptions it used. One school of thought is that they wanted to actually make it easy for the Sri Lankan government to, achieve the debt targets that we needed to. So having a low GDP forecast baked into your projections makes it easier to, achieve those targets. I can't speculate about that. But our view is that the huge supply side shocks that you saw in the economy, curfew, fuel shortages, electricity shortages, all of these led to significant contractions in economic activity in 2022 that we are not forecasting for 2023. So when you have an environment this year where factories are able to operate, people are able to go to shops, etc., we don't see how intuitively from our data models, we don't see how this year can result in a 3% GDP contraction. So our view is actually that there will be growth this year versus last year. This doesn't mean we will go back to levels of 2018. That's not what we're talking about. But last year was a very severe GDP contraction of about 10%. And we think there will be some recovery from that. And actually, if we stay on the course with the reforms that Sri Lanka appears to be undertaking right now, we think 2024, 2025 could look significantly better.
That's a very positive outlook, and that's really good news. If I ask you, what are your recommendations to businesses? Because like you said, everything seems to be turning, the tide seems to be turning, hopefully by the end of the year and definitely by the end of next year. What should businesses be watching out for?
So one of the key things I think is a change in the landscape. You're seeing this with the rupee. So and I think that's a part of the reason we're having this meeting. We are likely to go from what's called a dirty float, managed float of the rupee into a more free float, more freely floating currency. And this will bring with it positives and negatives. I'll talk about the negatives. The negatives from a business perspective is that it will become harder to plan where currency is going to be in 3 months, 6 months. If you're a business in Europe, for example, you really need to use hedging measures to, because you have no idea where the euro will be versus the dollar in 3 months. I'm not saying that the rupee will become, 100% free floating, over the next 6 months, but I think we are going to go down that path. And I think, so that's one of the key things that we'll have to get used to as businesses. I think I'm talking about the negative. There are a lot of positives that come with it. Having a free float allows, an automatic safety valve for the macro, and then when imbalances build up, a free floating currency allows those imbalances to settle themselves without us hitting a wall like we did in 2021, 2022. So there are huge positives for a free float. Cal and I are in favor of a free floating currency. We think it's a good thing for Sri Lanka, but businesses will have to watch out for this. The second thing is also on the tariff side. We need to move to become a more globally competitive economy. And what this means is some of the protections that local industries have enjoyed in the past could get eroded. Of course, with this come a lot of positives in that, you will have better access to markets. we will hopefully stop doing things that we are less efficient at and focus on the things that we are more efficient at, and truly create a sustainable economy in the longer run. But I think again, these are some of the things that will hopefully happen. Structural changes, that will change the landscape of business in this country. It's a change that we need to get used to. Also, if there is a significant SOE liberalization, again, it creates both opportunities and threats for businesses. So we need to watch out for things like that.
Kanishke, you spoke of inflation rates coming down and interest rates also coming down. I think our viewers will be interested to know the interplay between these and the IMF loan. Can you explain on this, please?
Okay, I'll first talk about the interplay between inflation and interest rates, and then we'll maybe talk about the IMF loan a bit. So historically, and for good reason, there is clearly an inverse relationship between the two. When interest rates go up, inflation comes down. But what we have right now is an extremely tight monetary environment that is potentially tighter than it needs to be to bring inflation under control. And this tightness is driven partly by policy. It's driven partly by fears of debt restructure, etc. So partly it's a risk premium, partly it's a hangover from the crisis that we went into last year. So given this, we are in a somewhat unusual situation where we can have inflation coming down while interest rates also come down. So I'll put it another way. So inflation is the change in price levels. So at the moment, already price levels are not changing very much. Yes, last month there was a little bit of food inflation, and that kind of blip always happens. But taken as a whole, price levels have remained relatively stable over the last 5-6 months. And so we expect that trend to continue. Also aided partly by the global situation. Commodity prices are coming down because it looks like the world is heading into a period of slow economic growth. So commodity prices are coming down, freight rates have fallen off a cliff. The global supply chain is kicking back into gear with China opening up, which should hopefully reduce the cost of things. So all of those things, those global effects are also helping reduce inflation to a certain extent. But domestically, we have the appropriate monetary conditions to reduce inflation. Now, when you ask about the relationship between this and the IMF loan, it's a relatively small impact for multiple reasons. One, this IMF loan is actually coming over 8 tranches, and you get a few $100 million each time. It's not the loan that's changing it, but the bigger impact is from the signal that IMF loan gives. That signal is a stamp of approval saying, look, you're doing the right measures, you're taking the right policy measures to bring your economy back on track. We are underwriting the government's recovery plan. And with that come, development financing from ADB, World Bank, which could be much more meaningful in the shorter term. The IMF has unusually allowed the Sri Lankan government some leeway in using this IMF money for budgetary support. That means the government can actually finance a portion of its budget deficit with this money, and that is a big help. But it won't be all of it. Really, the IMF money is meant to go into a stabilization fund. It will go into our central bank reserves and just help the country operate more normally, during this period of increased stress. But the bigger impact on inflation and interest rates and domestic liquidity, etc., is the stamp of approval that this IMF program gives. And just to give you an indication of that, of what kind of impact that has. Since the start of the year, we've had about 70 billion rupees worth of foreign money coming into the domestic government securities market. Foreigners have been net buyers for the first time since, I would say, 2017, 2018. And this is really the tip of the iceberg. It can become, a much bigger flow than that. But those are indications of, the kind of flows that the IMF stamp of approval can bring to the country.
It's time to take a short break. When we return, we'll resume our conversation on the economy and the rupee.
Display your brand message on digital screens at prime locations. The digital advertising network in Sri Lanka. Emerging media.
You're mobile, and so are we.
Gets me going.
Grab the Light 87 app at the Apple App Store or Google Play now.
87.8 and 87.6 island-wide. Light 87.
Welcome back to the show. We're talking to the chairman of Capital Alliance Investments, Kanishke Mannakkara. Kanishke, you mentioned central bank reserves, which leads me to the next question. We are in the process of enacting a new central bank act, and it looks like it's going to pave the way for an independent central bank. What are your views on this?
Unequivocally, an independent central bank is a positive for the country. There's a reason why successful economies have an independent central bank. This is because naturally politicians have a vested interest to manipulate monetary policy to meet their electoral objectives. It's human. It's not anything unique about Sri Lankan politicians, but politicians globally have this tendency. So the only way you can ensure that monetary policy in a country is run for the betterment of the long-term sustainable development of that economy and not for somebody's electoral needs is by making the central bank independent. So that's what we're talking about, and doing that and enacting some of these other reforms like free float of the currency, inflation targeting, etc. Could really put us on the path for longer term sustainable growth.
And what are the barriers that you see for this, for all of these things happening?
So the obvious barrier is political will. Because politicians need to give up a certain level of power. The position of finance minister of this country is extremely powerful, and it's too powerful, and those powers need to be diluted. Almost like we attempted to dilute the powers of the executive president some time back. So that while best of intentions might be good, I don't know whether there will always be some resistance to totally giving up control. That's one barrier. The second barrier is also mindset. I don't think Sri Lankans have fully embraced the idea of open markets yet, and that's one of the key questions our generation will need to answer over the next 20 years, which is the extent of state influence we want to have on the economy and markets. This is a much broader policy question. But, an independent central bank with inflation targeting and floating exchange rates, you're really talking about moving towards a more free market, set of policies, at least in relation to monetary policy. So the second question is whether we are ready for it.
And that question will probably not have an answer in the short run.
Yeah, I hope we are ready for it, but let's see.
Moving on to investor sentiment with all these changing dynamics, can you give us an overview of how the market is looking like?
I'll respond in Sinhala. It's called Asai Bayai. So, everybody sees the opportunity, but they're fearful. The last 2 years has been one heck of a ride, and I think people are understandably fearful. To be honest, we saw a situation like this as Sri Lanka came out of COVID, and you had this huge run on the capital markets, especially the stock market, and it took people a while to get used to new price levels, etc. So at the moment, I think there's a lot of optimism around, but also an equal measure of cautiousness.
And against that backdrop, from a capital market perspective, of course, what are your predictions for the rest of the year?
Well, you already called me an optimist, so I'll stick to my label. No, I'm positive. We believe that the macro is primed, is in a good place, and we are likely to see growth over the next 18 months. With that also interest rates coming down, liquidity improving in the market, and all of those things, maybe some foreign inflows as well, which we haven't really seen for the last several years, and a combination of these factors which should result in a good investment environment. It will take some time for domestic demand to pick back up to where it was 4 years ago, but I expect domestic demand to be stronger this year than it was last year.
Thank you. My next question is regarding something that's very close to LMD's heart. As you know, we launched a campaign called Refresh Sri Lanka to encourage a mindset change in society to create a more civic-minded society. So now when we consider all these economic dynamics, the positives and the cautious side of it, it's pushing and pulling the general public. What are your focus areas to really ensure that the government as well as businesses do not really ignore civic mindedness when they're coming up with solutions to fight the crisis?
This is very good question, and it's a very good initiative by LMD. Look, it's over the last 20, 30 years. I've been in this business for 20 years. You've had a lot of large Sri Lankan corporates profiting sustainably out of bad government policies. Some of these paro tariffs, some protections which outwardly say, oh, hey, it looks like a good idea because it's protecting domestic industry. But really, over the long run, what it does is it gives the wrong signal. It makes inefficient elements it makes capital in Sri Lanka, scarce capital, flow to inefficient parts of the economy. And over the long run, unless those domestic protections are managed very well, unless they evolve fast and they are reviewed on a frequent basis, what happens is that those domestic protections which worked 10 years ago end up creating the monsters and very influential large corporates that employ maybe thousands of people who have a big voice and have a huge vested interest in maintaining things that are ultimately bad for the economy. So this has really developed to an unsustainable level in Sri Lanka, in my view, and we have too much of the private sector that is not globally competitive. One of the things that I believe the private sector really needs to do is to stop looking for government support and protection and start instead to focus on their own competitiveness and become more ready to play in a global market. And as we do that, to also then demand from the government, good governance rather than those business protections that they enjoyed. So roll back the clock 24 months or 36 months. So much of the lobbying or virtually all of the lobbying from our chambers, etc., was about ensuring that the government does things to protect our businesses. We were not asking for anything about good governance. And hopefully we've had this wake-up call and we all understand that good governance is critical. And I hope, our business community wakes up to this. Perhaps for reasons of survival, many of our most successful businesses have been apolitical, and I think we should remain apolitical. I don't think there is space for businesses to become political. But the problem is we were also, to an extent, apathetic. And we must stop being apathetic towards the policy environment in Sri Lanka. We need to be asking for things that will improve governance, improve transparency, and improve improve the operation of markets, so that it forces us to be competitive, forces us to compete at a global level. And then, that's when we can scale our businesses and really grow our economy.
Thanks, Kanishke. Let's hope the wake-up call isn't put on snooze. We are almost at the end of our conversation, but before we wind up, any closing thoughts you would like to share with our viewers, focusing on the general public?
I shared a relatively optimistic view. I guess maybe one of the things that we should also think about is what are the risks. And maybe a key risk is instability at this moment. So, when you think about the investment landscape, which is what I spend most of my day my working day thinking about. What I worry about is, sort of systemic instability, our historic tendency to not stay the course, for policy to flip-flop from, one thing one day to another thing another day. If we are going down this path, we need to stick to this path for the next 5 or 10 years. And we need to, ensure that we actually see through some of these reforms that are being done. So I hope as a nation, we have the wherewithal to do that. But yeah, if you didn't ask me about risks, but if we had to think about what the risks are, for me, the risk would be of changing the policy direction.
We've been talking to the chairman of Capital Alliance Investments, Kanishke Mannakkara. It was lovely having you on the show, Kanishke.
Thank you so much for having me on the show. It's been a pleasure, Ruwandi. Thanks.
And to our viewers, thank you so much for joining us. Until next time, take care.
Don't forget to subscribe to our YouTube channel and follow us on Facebook and Twitter. Thank you for watching and stay safe.